All Things Money with David Blain, a discussion about your money, including everything from investing and taxes to real estate. Now with this week's program from D.L. Blain Company in New Bern, here's David Blain.
Hello and welcome to All Things Money. I'm David Blain. We thank you for tuning in to today's show. We've got some good information on tap for you. As always, we encourage you to give us a call if you have any questions or comments. Our phone number is 252-633-0107. And that's during normal business hours. If you're listening to this during the evening, of course, just give us a call during the day, and we'll be happy to listen to your question and comments. You can also email us at any time at allthingsmoney@dlblain.com. That's just like it sounds, allthingsmoney@dlblain.com. And we'll listen to what you have to say, and if we think it has some merit to put on a future show, we'll be glad to address your topic or question. We also encourage you to visit us on the web, www.dlblain.com. There you'll find information on myself, as well as some archive copies of the show. If you happen to miss an entire show or a segment, you can catch up on your listening there on the web. Today we're going to revisit something we talked about last week. Last week I tried to cover the entire housing problems in one show, and we tried to cram a lot of information in, and so we got a lot of questions and people asking us if we could go over that information again. And so rather than just repeating last week's show in its entirety, I decided we would cover some of the information, maybe summarize it, make it a little bit more coherent for the viewers and listeners out there. So here we go. What we're going to talk about is there light at the end of the housing tunnel? And a lot of my data and statistics comes from publicly available sources, but my friends down at Ned Davis Research, where I get most of my research from, have compiled this together for me and other clients. So we thanks to Ned Davis Research for their hard work on this. Three bottom lines for the housing. Number one, I think it's going to take between 2 and 4 years to absorb the approximately 1.4 to 2.5 million excess units of supply. The second point, housing downturns can take a very long time. They can last a long time. And number three, the housing market will not have a sustainable recovery until the labor markets improve, or another way to put it, until the unemployment rate comes down. So we're going to talk about this in more detail. First of all, like everything in a free market enterprise, we've got to take a look at the supply and the demand. In capitalism, model of economics without government interference, prices are set by supply and demand. And so these are always the first two things we want to examine. So first, on the supply side, there are several ways to measure the supply of housing. You can look at, for example, available inventory that's actually for sale. That kind of excludes what we call the shadow inventory rate, which is homeowners that are behind on their payments, or homes currently going through the foreclosure process. And so the other big data that we look at from the Census Department, they provide statistics on things like owner-occupied, renter-occupied, vacant homes for rent, vacant homes for sale, and other market, which includes the shadow inventory. And when we look at these statistics, we see that while there are in excess of 10 million units either on the market or the shadow inventory or potentially available for sale, this number is a little bit daunting. And really what we want to focus on is the excess supply, that how much of this 10 million units that are potentially available for sale, it would be considered excess. And so if we look at trends going back to the late 1960s in terms of vacant year-round housing units, vacant housing units for sale, for rent, as well as the other vacant units, which includes the foreclosed properties, we see, and we look at the trend of this since the 60s, we see that we probably have an excess of somewhere around 1.4 to 1.5 million units of housing supply as excess. Another way to look at it is the trend line of housing units versus households. And if we look at the trend line growth of households versus housing, we look at there are about 17% more housing units than households. And if you translate this, it turns into about 2.5 million units of excess supply. So two different ways to look at it. One, we get around 1.5 million excess units of supply, and another way to look at it, somewhere around 2.5 million units of excess supply. So two very robust methods of looking at the excess supply gives you those numbers. Now we look at demand. There are only two ways of reducing this excess supply. Number one is reduce the supply. As I mentioned on the last show, in Detroit, they're actually destroying, knocking down homes. That's one way of reducing the supply. And number two is increasing the demand. And obviously, more than likely, it's going to be a combination of the two, reducing the supply and increasing the demand. If we look at the most critical aspect of these figures, the rate of household formation is the most critical. And household formation is affected by demographics such as birth, death, divorce, immigration, all these type of things. But we look at household formation. It's a very important part of the demand side of the equation. Now, unlike other industrialized countries, the U.S. has actually been very fortunate, and its population has not been shrinking. A lot of emphasis has been placed on the baby boomers, but in reality, the echo boomers, the generation coming into age now, is actually larger than the baby boom generation. And so there will be some demand on the horizon. If we look at some of the data here between, looks like somewhere around 2015 to 2020, we have a significant upturn in the population of the U.S., and these are between people between the ages of 20 and 29. So when we look at some of the household formation statistics and the rate of growth in the population, we're looking at somewhere between 2 to 4 years absorbing the excess, somewhere between the year 2012, if the excess is only 1.5 million, on out to 2014, if the excess is closer to 2.5 million. So that's the look at the supply and demand. We've got excess supply somewhere between 1.5 and 2.5 million units, and based on the demand and household formation, we're looking at between 2 to 4 years to absorb this excess. Well, we'll continue a little bit more on the housing market when we come back from this break. I'm David Blain.